Hey guys, what is happening, man? It's been a minute since I actually did a review for you guys, but I thought I'd do something for you guys since I literally been absent for a long time now, and I want to get this year started properly, guys. So we're going to be talking about two trading. Well, I say two trading opportunities, but it's more or less one. But I'll describe to you guys what the second one was, right? But two trading opportunities that came about from last week and more or less why I took them. But what I'll start with, guys, is I'll kind of just start with like why the whole trade idea came to be, and kind of go from there, right? So we're looking at fiber now. Now, essentially, guys, the trade opportunity that I was talking about was I was a short, right? And I think I posted. Let me just check if because I think I posted this in the actual group, right? I think that's what I was looking at. Unless I didn't do it, did I not do it? Oh, twat. Alright, guys, sorry for not posting that shit in the group. I really should be slapped for that. But essentially, guys, I'm gonna just talk to you guys about what happened and why there was a good trading opportunity on Thursday and on Friday last week, right? So essentially, guys, as you guys know, I was kind of waiting for price to break out this box that it's been in for literally a long bloody time, good like 2 months, right? So price is kind of stuck in this range, okay? We had this consolidation that was going on, and guys, all this really was is there's just accumulation going on in the market, right? So price, I knew price most likely was going to be bullish. I was just waiting for the confirmation so I could get an entry and trade it up. But essentially, guys, price more or less was consolidating and gathering orders. Now, the reason why we didn't really get a straight trading opportunity, guys, was because of the consolidation that price was in. Okay, so it's in this big consolidation. We've had more or less price hold it this daily block for a good good 6 weeks. About that, probably more than 6 weeks. No, it's a good 2 months. The price has been holding at this daily block for a good 2 months, right? Ah, wow, wow, very poor. All right, sorry guys, let me restart that. Let me just get another chart. How could I shake myself like that? Oh my days, the disrespect, the disrespect. Anyway, let me just get this chart up again. Ah, all right, fuck's sake, great. So guys, back to square one, right? So we've got a fresh chart now. It's pretty good saying, stop being a twat. Anyway, so we've had price more or less in this box, right? So price has been in this range in this box for a good 2 months now. What was actually going on is that I know I told you guys there was some S&T divergence that was going on in the dollar and what's it called, fiber, and I think I actually called this up a while ago, right? So I knew that price, there was a high probability of price being bullish, right? But because there was no real structure that we could actually play off, guys, right? There's a lot of ranging going on. And that actually did help me in my thing as well, guys. But the point is, there was a lot of ranging going on, and it wasn't that much. The structure wasn't that clear on the daily, right? So we didn't get any break above. There was a lot of wicks. Price didn't close above this level right here, okay? So we have a significant SNR level right here, okay? So you guys can see the price action here. We've used as support, broke down, resistance, usual bullshit, okay? So I was waiting for price to break above this more or less 1450 level, 1465, right? This is where I was looking for price to break above, okay? Because this was a very strong resistance point. As you can see, price came up here multiple times. Used as resistance there, came down, brought the structure in the market, pulled back up, resistance, tested again. Short-term high there, I got blown out, resistance, right? So I was waiting for this area to get broken. Now, once we broke it last week, right? So once, I think, because I told you guys I wanted to see 1500 get blown out of the water by the end of the week. That got taken out, and price actually came into a neutralized liquidity at 1550, which was my second TP level. Okay? And then what did we get from here? We got a fall down. So, because I missed this level, and the reason, guys, I was actually looking for a long as well this week. I was trying to get a clear entry, but price wasn't really giving me what I wanted it to. It was just being a pain in the ass, right? So, because I didn't really get any proper entries for a long, right? And to be fair, guys, there was entries here. I mean, I could have taken an entry down here, but I was really looking for breakers up. Didn't really get it. So because I missed out this whole move here, what I was going to do was once price took out this significant structure high, guys, on the daily chart, extremely significant right here. What do we also have here? We have a resistance point, okay? That is a bearish block right here, okay? 1 minute. So what is this, guys? You've seen price more or less take liquidity out into where? A resistance point, okay? Very high probability setup right here, guys, and that's why I took a short, because we had more or less like this high neutralized, that high neutralized, that hadn't been taken out. That was like that was October's high right there, guys. Or was it November's high right there? Significant highs that hadn't been touched in a while taken out, guys, in one day, right? So once that happened, I thought, okay, we definitely going to get some relief now. Why? Because we've exhausted all the sellers now. We're exhausted price. The market makers have fulfilled their goal, which was more or less to neutralize the liquidity up above that high, and they also pulled price into a bearish block right here. Okay, so this was a perfect place for me to sell from. Okay, this is why I was looking for sales on Monday, sorry, on the Thursday and after Wednesday, and I'll show you guys how I got entry here now. Essentially, guys, it was very, very simple, right? So I just wait for price to neutralize liquidity, and what I wanted to see on the Thursday was I wanted to see a raid of that previous day's high back into the block and then a distribution lower. Okay, that's all I really wanted to see. Any bullish, if price continued moving up and it didn't give me that raid in in London Open, then it would have been a no-go. I probably would have rethought that, I would have waited till price found support here and then target that void. But since we did get that, and we did get a breakdown, guys, that was the main thing for me. So as you guys can see, the trade I did was formulated on the daily chart. It wasn't formulated on the lower time frames. Okay, all of this was being done on the daily, and the daily was extremely clear. To be fair, I should have taken a lot more risk on this trade, guys. But yeah, that's besides the point, right? Anyway, so this was a counter trend trade, guys. Why? Because trend is bullish. However, these are significant. I only take counter trend trade, guys, when I have very high, high time frame levels that are linking up and significant setups that I think are high probability, even though we're in a counter trend, right? So what I did, guys, is I waited for price to, give me that setup in the morning, and my initial target was literally the wick of this daily block. And I'll get into more detail about that later, but that was my target. Why? Because if we're trending against a trend, guys, what are we doing? That means this is more or less a pullback into a bullish block to go long. That's all this really is, okay? So, if that's the case, guys, then we're going to be using this block as our target for a short-term trend, okay? All this is, guys, I'm just trading a short-term move back down into support after liquidity was neutralized above that high, okay? So we break this down on the low time frames now. This is what the range looks like. I was talking to Giovanna about this, and she kind of knows what my setup is next week or coming into next week. Now, essentially, guys, all I was looking for was a breakdown above here. Now we talk about a bit more about that later, but I want to just understand the range I was using. Now, the range I was really using was from this structure low. Okay, so this was Thursday's. It was Thursday's range I was actually using. Okay, guys, it was this range right here. Okay, so this range low, and then this range high. Okay, that was the range I was using for price. Sorry, this range high right here. Okay, guys, so that was the range I was actually using. It was more or less just Thursday's range, Thursday's high and Thursday's low. So I wanted to see price neutralize liquidity above the range. And notice, guys, we are still in a bearish resistance point. Okay, so we should be seeing bearish pressure up here, right? There should be no reason for price to reach higher and not show a breakdown. Okay, so all I was really doing, guys, is I was waiting for price to give me a breakdown in London Open. We got that price more or less was moving up in London Open. In the Asian session we saw that run up, and then in the London Open session we start to see a breakdown. Now, again, guys, this is real simple. What I'm doing is I'm looking for the bullish candle that pushed price up, okay? And that would have been this candle right here. So all I really want to do is wait for a breakdown and then go short. Now, as you guys can see, you did have that breakdown. Price broke down, pulled into short-term areas of support right here. And then what did it do? It pulled back into that breaker right here. And then we saw distribution low. And now, I didn't use the Audi block, in all honesty, guys. I'll show you what I actually used instead. Because as you guys know, I like to break this down on the low time frame to get an entry here. But essentially, guys, what I was looking for on this trade was I was looking for the last bullish candle that ran the stops. Now, this was the candle that I was actually looking at. Okay, guys? This one right here. Right? So, when we got a breakdown below here, when we got a break and close, guys, and this was the break and close, right? What I did is I just put my stop above here. Now, as you guys probably notice, we did get a wick up here, right? Just want to, for transparency reasons, guys, I did get stopped out here, and this is what happens, guys. This does happen, right? Price stopped me out here, but then I got back in, and no, sorry, yeah, price stopped me out here, guys. Sorry, I'm trying shit. Price stopped me out here, and at that point, I was like, all right, cool. I'm definitely gonna get back in. I just wanted to see the bearish confirmation, okay? Now, what I actually did in this situation was I didn't get back in here as I usually do. Usually, what I do is I wait for price to do it, you know, wick out. Because usually it'll do that stupid bullshit like that. I wait for it to wick out and then I just get short again right here. Okay? In this situation now, what happened is that price wicked out and then started to move lower. I didn't actually get short from there. What I wanted to do is I wanted to wait for New York open session because I thought there would be another entry. Now this is where I actually got my entry from. Okay, guys? So that was the initial entry point. What the best thing to do really would have been to, you know, wait for price to close below it again and then short. So as soon as that went up and as price came down and closed here, you could have just short from there, put your stop above there, using around a 10-pip stop, and that would have been a nice place to actually use this, put your stop loss, guys. Alright, that would have been a really good place. The reason for that is because now price is wicked up. There is no reason for it to, you know, go back up there. Right? It's already giving you like an OTE retracement back into that block right there, and it's also neutralized these highs right here. So there was no real reason for that to actually go up any further. So once price actually closes below that now, the area should be safe. Alright, guys? So you could have got an issue from there. Now, the reason why I got an issue from here, guys, is just because I realized that price, I thought it was a strong opportunity that price was going to find support at this point. Okay, that is what I was placing my bets on. Now, the reason why I did that, guys, is because I have had issues in the past where we've had a strong support level right here, and this is actually an hourly block as well. When I see that, I usually what price will do is it will pull into here. You know, you might get that short on an open, and it'll put into here, find short-term support there, and then give you an OTE entry in New York. And that's what will usually happen. Well, usually when there's a strong support level like this, either they're going to hold it here, and then they'll do a further breakdown the next day, or they'll give you an OTE retracement in New York Open, and that's what we got here. So that's the reason why. That was the main reason why, because I didn't think they were going to blow through an hourly support level intraday unless they went back up to retest, and usually they use these levels as pivot points. Okay, so that's the reason why I actually waited for the setup. Luckily, it didn't just blow through a level and not give me an entry, because it could have done that, but it didn't. So what I did, guys, is I don't usually do this, but because these are the only times I really use OTE entries, guys. Now I use one here because I know how price likes to react, or I know how this pair likes to react around time of day. And the New York Open session starts around 12:30. Okay, so around here, that's when it starts. Now, when I start to see price move up just before the New York session into an old area of resistance, right? We have a nice juicy block there. We have a small one here. That is when I start to say, okay, great, we should get a breakdown from here now. And I set a limit for this level right here, you know, 1542. I'll just use a 10-pip stop just for just so I won't get stopped out. And my targets, guys, were literally, well, my real target was down here, but I put my TP on here. Why? Because it's an old high, and I reckon to probably use that support. You know, price doesn't always pull back deep into this area. Sometimes they like to leave that, as I'll explain a bit later. But that was my initial target, guys. So literally, I just got wicked out of that trade just by, I mean, it's by something stupid, right? But that left me with a good reach reward for that day, right? So I think I made around 4 out that day, something like that. Where did I put the stop again? So the stop was around here. So yeah, it's around a 6 hours. It's a good trade, guys. So, you know, this just shows you guys you don't have to do anything for the whole week. Get one trade and you're sorted, right? One trade and you're done. So that was the actual setup that I was looking at on Thursday, and that's why I took the trade, guys. So again, we had institutional interest up here. Price had taken out a significant high, and then what did we see? We saw price run that high in London Open to give us our setup to go short, and then all I did is I waited for a breakdown in the form of an OTE, and you could have taken a short from here and just been a bit more, you know, being a bit more smart with your stop loss placement, guys. But essentially, all I really waited for was price to break down. Had a breakdown here, had a retest right here, and that is all you really need, guys. All you got to do is get your entry there. If you want to put your stops above a structure high, which sometimes I recommend to do. You can do that and take a smaller R and just use more risk if you want to trade like that. But essentially, guys, that was the reason why I took that trade, okay? Now, going into Friday's trade, right, I'm going to just tell you guys, I actually got stopped on this trade, so that was the only successful trade I took this week. I tried to short this pair again on Friday. Why? Because, again, guys, my target for shorts, right? So my target was actually this block here, this 4-hour level. I'll go to the 4 and show you guys in a minute, but this was a 4-hour block right here, okay? So price hadn't come into that 4-hour block yet, and there was still a void here that hadn't been filled, and price had just created a short-term low. Now, it created a short-term low inside of Thursday's range, okay? So what does this tell me? This tells me that what they are doing, guys, is they're building liquidity below that low, okay? That's what they were using that area for. So when it didn't run out, the reason why I knew this was them engineering price up to get more sellers to place their stop loss below there and more buyers place their stop loss below there. The reason why I kind of had an idea that they would do that, guys, is because this level didn't really come to any real area of support. Like, it did come into an old high, but it didn't come into an institutional area of support, guys, okay? Which would have been either that breaker or it would have been this block right here, okay? And that didn't happen. So because it didn't happen, guys, and I started to see price move up, I thought they'd probably drop price again, and that's what they did here. Now, initially, guys, I tried to take an entry in the London Open session, which was around here. Reason for that, guys, is because I saw price more just give another OTE on a larger time scale. That swing high to that swing low. Lined up with a 79 retracement level, and it also lined up with a 30-minute and an hourly order block, okay? So that was the reason why I wanted to take a short in London Open. I actually took a short from here. I didn't place my stop loss above the structure high, which would have been a better option, guys. That's just me, you know. That's the shit thing about using stops, guys. So that's the shit thing about using like lower time frame levels, guys, because they don't always hold. Okay, if I sold from here and just put my stop above here, I would have been alright. And then, guys, I mean, that's still a good 4-hour trade right there. Not, well, almost 4-hour trade, right? So that's a good risk reward. So again, guys, that's just a learning curve you've got to take. That's just what happens sometimes. But again, you can see price came up into an old area of resistance. Okay, that's what happened. And also, guys, if we're using Wednesday's range, what do we have right here? We have price consolidating around the 50% retracement area, okay? Equilibrium. So again, this is a monumental level, guys. Monumental level for price action. Price is either gonna, if it starts consolidating at the 50% level, it's either gonna expand in one direction, vigorously or the other, all right? And because we hadn't come, because this floor hadn't been filled yet, because we had price more or less engineer more liquidity underneath that low, you know, there was a much higher chance that price would, you know, be pushed lower. Okay, and also, guys, another thing to remember is because look, another thing to remember, guys, is there is more resistance at this point. Okay, they've already built all this here. There's a resistance level here. There's another one here. There's another one here. There's, you know, the chance of them. There's the chance. You know, the easiest way to go is down, right? Easiest way to go is down rather than go up. Why? Because there's more resistance points here, here. There's just no real reason for them to take the market up. They already took it out and neutralized liquidity here, and they neutralized it again. So why would they go up again? What would be the point in them trying to take liquidity above the market? No, because there isn't any. Where is it? It's going to be down here. Why? Because when people start seeing price move up, what they're going to be doing, buying. We're going to be putting their stop losses underneath that low. There's also going to be more liquidity building up inside of that range again. And price had not come into any real support level. So it was just it was a no-brainer, guys. You know, really, I should have gone into a higher time frame and just tried to short it from here. But again, guys, like I said, you know, life is life, man. So that is essentially the trade, guys. That's why there was a short opportunity on Friday and also on Thursday. So it's real simple. Now, coming into this new week, guys, I'm expecting to see an expansion, hopefully to the upside. I'm expecting to see this high being blown out. Again, this high didn't come into any real resistance point. So I want to see this again. Looks like to me, you know, open liquidity in the market that needs to be neutralized. Again, we have a nice big void right here. We've also had price more or less make a double bottom here again. So what I'm expecting, guys, on Monday, if this hasn't got rated already, price to kind of meander around here, drop down in the morning into this block right here. So that'd be neutralizing those double bottoms right here. Okay, so 2 double bottoms right here. Oopsie daisy, come on, come on, come on. All right, great. And then we see what price spike down into node areas of support. Again, this is kind of around the 50 level as well. I like to see, you know, the 50 levels and the full figure levels, sorry, lining up with institutional support and resistance points. So, you know, essentially, guys, it'll be a nice breakers open in the morning. That's what I'll be looking for, to long price back into this liquidity point right there, and that's about it. I mean, you know, if I'm going to be really, really conservative, guys, because, you know, if we do get this up on Monday, I would literally just be looking to long price back into that same 50% resistance point, okay? And then obviously if price continues to break above these highs, then I'll be targeting there. But absolute minimum, that void should get filled in. But again, guys, the higher time frame is with us. So if anything, I would just get a position on Monday. Monday or Tuesday might set low of the week. Could be Monday, but if it is Monday, get in from the low of the week, probably get out in a high, aiming for, you know, 1572 or 1570 as first targets. And then guys looking for, you know, 1620 again, another institutional number right there. Okay? And then of course into here. But we are in flow with the trend, we are in flow with order flow, so I would say, guys, it should be a really explosive move. So yeah, so that's more or less a trade recap. I hope you guys had a good week and take care of yourselves. We will speak later. Alright guys, take care.